Hello, I'm Victoria Hartley, Group Editor of Mortgage Solutions, and welcome to Mortgage Solutions Television. Now, today, we're talking about complex incomes. Some lenders have adjusted their willingness to consider second incomes or a higher degree of complexity as people increasingly hold a portfolio of jobs or have taken on more than one income stream since the pandemic began. Interesting subject. So here to pick this apart today, we have Steve Griffiths, Sales and Product Director at TML, Greg Cunnington, Director of Lender Relationships and New Homes Alexander Hall, and Andrew Montlake, MD, Corico Mortgage Brokers and Chairman of the Association of Mortgage Intermediaries. Welcome, everybody. Lovely to have you here. So, Steve, first of all, can you give us a complex case example so we know exactly what we're talking about, either buy-to-let or residential that TML has completed on recently?
Sure. So generally we see the more complex cases where income is concerned, probably in the residential space, because you're making more of the lending decision on a buy-to-let, on the commercial aspect of it, the property, the rental ICR, etc. So we generally, most of our cases, you will find, by the very definition that they're coming to us in the first place for residential, will have a degree of complexity to them. There is always a reason why the advisor cannot place that case with a high street. So, it's quite hard to sort of pin one down in terms of actual, recent cases. But I actually discussed a case at an event last week, which I think really highlights kind of the issues that we're talking about here. And that was we had two really good earning customers. They were earning a decent level of income, decent loan to value, but the advisor was really struggling to place that case. And it really just came down to the fact that what you had was two applicants, one of which was within financial services, had quite a high reliance on for affordability on their bonus. So effectively needed to take 100% of their bonus income, which not many lenders will take, some will do. So we had that on one side of the application. And then on the other side of the application, we had a contractor with two contracts, so two separate contracts. So that can cause a problem where even for contractor specialists, they generally tend to like to have kind of one contract, it was on a day rate, rather than any complications around that. But this was quite a straightforward scenario that certainly I think we'll start to see more of in the contractor space for contractors that are working outside of IR35, where they possibly have two vendors that they're working for. And if actually, like this case, there was three days and then a 2-day contract, and we were effectively able to achieve affordability across all of that income. So looking at all of the earned income for applicant one, plus the bonus, and then all of the contracts are effectively a day rate standard calculation across the two contracts. And I think that was a really good example of something that these were great customers, but they were really struggling with those two elements to actually come up with, for the LTV that they required to have a wide range of lenders to look at.
And so from an underwriter point of view, obviously your guys are fairly highly skilled. They see a lot of these cases all the time. They know what to look for. But what in particular did they want to see to make this case fit for TML?
So I think with those kind of scenarios, it's about experience, and it's about consistency. So, especially if you're looking, for instance, at taking a high degree of variable income, whether that's overtime or bonus, we'd like to see some consistency, which you can generally see through a payslip. Is that been quite paid evenly throughout the year? Is there maybe one or two previous P60s that we can look at to actually support that income? What we don't want to think about is this just a one-off? Are we going to, overextend somebody by taking what is one very good year, and that isn't the same as what the position is going to be previously, or more importantly in the future. So in terms of earned income, it's about showing that track record. And again, within the contractor space, that's probably, that scenario that we've just explained there. Would we apply that to a very new contractor that's in their first contract? Probably not. If we've got somebody that's got a track record in the industry, probably previously employed in that industry, and probably a longer term record as a contractor, and quite a specialism, so something that there is maybe some professional element that goes with that, whether that's IT, project work, all those type of things that you tend to see a lot of within the contractor space. It's making all of that rationalised to say, actually, do you know what? This makes sense. that we're not looking at just a one-off period for a higher amount of income, and we are looking at somebody who is probably going to maintain the same level of income within that structure going forward. And that's really, I guess, what we're asking advisors to look at. But it's the sort of thing that can really be, really sort of dug deep into in terms of the conversations with the BDM before. If we need some support off an underwriter with a smaller lender, you tend to get maybe a quicker referral decision if it is something that's maybe needs an exception or is outside of criteria. So a bit more work up front, pre-application, but hopefully that makes a much smoother process for the case once it's actually in for a evaluation, hopefully a quick mortgage offer.
Lovely, thanks, Stephen. Right, let's take this back out to the brokers now. So are you seeing more complex income streams coming through, especially among the younger age brackets? Greg?
Yeah, we're seeing a lot of people who do two jobs in particular, in all shapes and forms as well. So a lot of people now doing delivery driving. We had one recently, it was a doctor who's always done 3 days a week. They're now locuming for 2 days a week, really good additional income source. And what we find is obviously we need to then sense check it all makes sense in terms of days and hours. If someone's doing 90 hours a week, I doubt you'd really want them. I don't think we should be encouraging that behaviour either. They'll probably burn out in a few months. But the other as well is a lot of this is very recent. So then there's not so much track record. So it's about getting a real understanding of what is the profession, is that viable? Are you going to be doing this for the next couple of years? Does that income make a lot of sense? And we are finding lenders are getting a lot more amenable actually in having those conversations and taking the clients on board. But yeah, a lot of our first-time buyers are working 2 jobs more than I've ever seen before.
Interesting, and this is, I mean, from a sense of desperation or imagination. I mean, obviously it could come from many different places, couldn't it?
Yeah, no, absolutely. And actually, I think the whole nature of work is changing. And in the future, you might see more people with a portfolio of jobs rather than just one job. The idea of working for one employer for 25, 30 years, I think that's really disappeared now. There'll be some industries where it's like that, but a lot of young people coming up, they want that flexibility. They want to be able to do different things. They might do some, we're seeing a lot of cryptocurrency, that type of stuff, a bit of trading there, or a bit of delivery driving, or a bit of this, bit of that, helping your mate out working for their company. So I think people want to be flexible, and it's going to be a challenge for underwriters to be able to get to grips with all that. But I definitely think that's here to stay.
Yeah, that makes sense. I mean, can we get into some examples of what you've seen recently coming in to your brokerages in terms of where specialist manual underwriting really made a difference and got those cases placed?
Yeah, absolutely. So, I mean, it's funny listening to Montevex. There's a real entrepreneurial mindset in the new generation, isn't there? So,
absolutely.
Whereas I always, you wanted to be a rock star or a footballer or a mortgage broker, it now seems to be much more a YouTuber or an Instagram model. And we've seen it too. We had recently, one was a client who all of their income comes via Instagram, and it's been going through the roof. So on paper, because they're self-employed, the income is actually about less than half of what the income is in real life on a day-to-day basis. So we managed to get a specialist lender to actually look at the advertising contracts, the business bank statements, what's coming through. And that was really interesting. And another we had was a client, a first-time buyer with a really normal job actually. But when we got the bank statements, all the deposit money was going out to just a person. So we had to dig in because obviously we realised straight away, a lender's going to see this, what's going on. And it turns out his friend has a business. So for cash flow, he lends his deposit funds to his friend, a few thousand a month, gets it back at 2% interest, and just sees that as a really rock-solid income source. To me, that looks quite risky, for not a lot of return, a lot of effort, but each to their own. But again, that had to go to a specialist lender, because any high street lender just looked at it and went, we can see what they're doing, but that's just too much time to go through our risk departments. We're just going to say no to this one. And that's where the specialist lenders really do come into their own. With some of these more complex scenarios, we're definitely now seeing.
I love that example, Greg. It depends on the friendship as well, doesn't it?
Yeah, exactly.
That's got to be rock solid.
None of my friends.
Yeah, I was going to say.
These are the issues, aren't they? But from a tax point of view, that perhaps offers lenders some issues as well, doesn't it? Because obviously, we're not quite, perhaps we don't know quite what's going to come down the line, do we?
Yeah, I think there's 2 issues as well. It's not, especially where first-time buyers are concerned, because generally tax can be straightforward because you need some form of very generally straightforward, boring tax document like a payslip or a P60 or a self-assessment document that says these are the earnings, and generally as long as the numbers are on one of those documents, we can generally take it. The other element is where you've got lots of these things going on, especially from a first-time buyer perspective, you've got cash coming in and out of an account. So in terms of proof of deposit, that can make for a really complex scenario. And I think that's another really important point for advisors to take away, especially dealing with specialist lenders, is that because we are more willing to take perhaps a wider risk approach with the customer in terms of maybe their income or their credit profile or their job type, etc. There may be other things that are slightly tighter, and things like proof of deposit or maybe the actual property itself, that advisors can maybe think that, well, that's just BAU for a high street lender because they're not taking the risks in another area. So it's really important not just to talk about the obvious issues, but actually just to look at the whole case, because there might be some other things that may be very straightforward for a high street lender that maybe a specialist lender will actually go, hang on a second, we need a bit more information about that, or we need to rationalise that part of the puzzle a bit more than you would do if actually the rest of the case was completely straightforward.
Makes sense.
I think the one key point that comes out of all of this is brokers' access to underwriters.
Yeah.
And actually being able to talk through in a 5 or 10 minute conversation is often solves loads and loads of issues, because you go back and forwards on email, you might send different things in, but actually having that conversation, I've got umpteen examples of cases where actually you've spoken to the underwriter and the underwriter said, oh, do you know what, Monty? Yeah, I get it now. Okay, so I tell you what, get me this and it's fine. And then you get that document and it's sorted. So that is really, really important going forward.
We couldn't do what we do unless our underwriters managed a case through from, kind of cradle to grave, right through from the application through to the offer, and also that advisor had access at any point during that time to do exactly what Monty just described there. It's really hard to do it. Things get lost in translation.
Absolutely.
A telephone call can save a dozen emails, so we back that 100% and make sure that we have not only open access to the underwriters having the case, but we look to build good relationships hopefully with the advisors, so the next case is maybe a bit easier and a bit straightforward.
Old school, sometimes the best school,
Yeah,
isn't
absolutely.
it, really? Let's be honest. Lovely. Thanks very much, guys, and thanks very much for watching Mortgage Solutions Television. We'll be back with you soon for the next segment.